To be respectful to your time, we're going to go ahead and get started. More people may join us, and we welcome you as you're newly arriving in the room here. It's 10:30. I'm Dave Betts. I'm the Chief Success Officer at Generis and Associates. Joining me here today, and you'll see them momentarily, are Pat Generis, our Managing Principal, Kellen Leone, one of our tax professionals, and Austin Shearer, our Manager of Digital Marketing. They're all going to play a role here today, and you're going to hear from them. Today's presentation is about economic relief for the self-employed, and this webinar is being recorded, and you will receive a link to the recording when it's done. So if you miss something, don't worry, you'll have an opportunity to pick it up. Today is an update on the Paycheck Protection Program guidelines. Some guidelines were issued just the other day, and we thought that we would want to get in front of you and make you aware of the changes. And this webinar is really about those in self-employed, sole proprietor, and partners who receive self-employment income situations. So once again, we're glad you're here. And once we're done with about 20 minutes of content, where we're going to give some high-level information and then examples, we will have plenty of time for Q&A, and we'll explain how you can ask your questions in just a moment. I do want to say that if you own a business, a corporation, a C Corp, or a partnership, we did a webinar on April the 1st, and we would encourage you to access that recording on our website for all the details of the Paycheck Protection Program. On our website, we have under Client Resources, the Coronavirus Updates page. And down here, slightly below, it says access our free webinar and bonus resources about the Paycheck Protection Program. We've gone into great depth in that program about the Paycheck Protection Program. Today, we'll cover just a little bit of a high level, but if this is your first time learning about it, we would strongly encourage you to access that recording and those bonus resources to learn more. That said, a little bit of a primer. The Paycheck Protection Program, federal government stimulus, where you can borrow up to 2.5 times monthly payroll. And what the new guidelines talk about is how self-employment income is factored into that. Now, these loans are 1% interest rate on a 2-year term where payments are deferred for 6 months and there is no prepayment penalty. But one of the great things about the Paycheck Protection Program is that it was designed for loan forgiveness. And we're going to cover that in just a moment. It's called the Paycheck Protection Program. It's designed to keep people earning their paychecks. So if you have employees, one of the key points is that they want you to maintain the headcount when compared to a prior period. So how many people were employed in 2019? How many people are now employed in 2020? Those levels ought to be pretty similar. And maintaining the salary levels that you pay out, similar to the prior year. And so if there's a greater than 25% reduction in the salary level, then the amount of forgiveness can be affected. Again, we've gone into this in detail, both in the frequently asked questions themselves, as well as the webinar here. So we're just revisiting it at a high level now. Now that said, as we get into the content today, you may have questions, and I'm going to turn it over to Austin for just a moment.
Hey everybody, my name is Austin Shearer. I'm the Manager of Digital Marketing at Generis and Associates, and I'll also be your MC during the Q&A section. So after they're all done, we'll start taking some of the questions that you have, and you can write them in the Q&A section in the Zoom menu below. You'll find it like right down there if you're in your Zoom meeting. You'll also see it on screen, that Q&A. Please type any questions you have in there. If you type them into the chat, they may get lost and we might not end up answering your questions. When we begin taking your questions, we'll bring you in with us and enable your microphone so you can ask us the question and any follow-up questions that you have personally. If it's just a short question or you don't have a microphone and you'd prefer me to read it, please leave that in the question and answer that you have, and I'll just read your question for you. That's all I got, and I'll see you guys at the end of the presentation. I'm going to hand it back to Dave.
Okay, thanks, Austin. So moving on here, what's happening today? Well, there's good news and bad news. The bad news is the $349 billion that Congress has appropriated for the Paycheck Protection Program is gone. That news was just released yesterday. You might have seen it on the media, in the news, and even coming from banks themselves. The good news is that the federal government is discussing additional appropriations. The number that we're hearing is $250 billion of additional appropriations for this. Clearly, the need is huge. I mean, small businesses, self-employed individuals, sole proprietors, the economic engine of America, keeping so many people employed, hurting so badly during this time. So there's a lot of advocacy, but it's our federal government and it is Congress, and they need to debate, and everybody needs to win something, to get this. So stay tuned. But the reason we're doing this webinar with you today is to keep you at the front of the line, to get you at the front of the line. Now, if you've already submitted your application for a Paycheck Protection Program loan, great. You've done what you can. You've gotten in the queue. If you have been notified that you've been approved but have not yet received funding, you're in a pretty good position. If you've not been notified that you've approved but you've submitted the application, you've probably done what you can do. If you have not submitted your application, you're going to want to, and today is going to help you if you are a sole proprietor, self-employed person. Now, we are hearing that many banks have stopped accepting applications for the Paycheck Protection Program because of the lapse in appropriations. That said, not all banks have. You should contact your bank, who you're banking with, and if they allow it, apply now. Again, by the end of today, you'll see some of the resources, you'll see some of the things you'll need, and that will get you at the front of the queue. So here you can see we will continue processing applications we received and will continue accepting new applications in the expectation that Congress will eventually pass the requested additional $250 billion. This is an email from a bank to one of the clients at the firm here. So they're still accepting applications. You're going to want to be at the front of the queue. If $349 billion went away in less than 2 weeks, you can imagine that $250 billion is going to go away equally as quickly. Now, what are the things that you're going to need? You're going to need to complete an application. You're going to need other business documentation, including your 2019 Form 1040 Schedule C. Later, when Pat and Kellen are going through examples, you'll see the documents that are being referenced. Even if you have not yet filed your 2019 Form 1040, they are requiring that you complete the Schedule C for that and submit it if you're self-employed. Additionally, you will need to prove your self-employment income through a 1099 Form 1099 MISC and any other evidence of self-employment. Now, I do want to show you on our coronavirus website, we have the updated guidance from the SBA, which goes into all of this. So right here on this page, this links to the guidance that we're referencing here. So if you want to read these 19 pages in detail, you're more than welcome to. Since we're talking about what's needed, right here on that same page, as you go into the FAQs, what do I need to apply? You'll want to complete this loan application. We've got a link to it, and here it is. And then here's a number of the things that, depending if you have employees and what the structure of your business is, and in particular for today, since we're talking about sole proprietors and self-employed people, we mentioned things that you'll need. They need to verify that you were in business on or prior to 2/15 of 2020. Okay, that's the needed documentation. Again, you can reference that from our FAQ page. Now, it was just the other day that the SBA released clarifying guidelines about sole proprietors and self-employed individuals. And you might expect the SBA to continue releasing clarifying guidance because there are a lot of questions about how this program operates. And banks are having questions, small business owners and self-employed people are. And so those questions continue to get answered. It's one of the reasons we're doing this webinar. As information's coming out, we want to get it to you as quickly as possible so that you can make informed decisions and have the best chance to get in on the action here to support your livelihood, keep your families and your employees moving forward during this difficult time. So what is true in this updated guidance is that loan forgiveness for a sole proprietor is based on your 2019 Schedule C net income from line 31, where up to $100,000 for you, because that is the maximum amount that they're allowing for employees and for you as a self-employed person. And so what is allowed to be forgiven is up to $100,000 divided by 52 weeks times 8 weeks. That amount based on your 2019 income. They're not saying prove to us what you've earned in 2020. They're saying based on what you earned in 2019, what you can borrow and what we will forgive is 8 weeks of that amount. Additionally, what's forgivable if you're able to borrow this money is actual payroll related expenses if you have employees. Again, wages up to $100,000 per employee, and then the employer paid health insurance and retirement contributions for employees, not for your own, because if you're self-employed, that would be factored in up here, and then state unemployment tax. Additionally, you can use these funds for, and part of the loan is forgivable for rent, mortgage interest, or other real or personal property interest, and utilities. Now, regarding these things, rent, interest, and utilities, it's going to be actual expenses that you incur and pay during the 8 weeks that follow the loan being put into place. And what's true about the Paycheck Protection Program is that at least 75% of the funds need to be used for payroll. I mean, it really is designed that way to keep people working. For partnerships, self-employment income also qualifies up to $100,000. But what is true for partnerships is that the partnership entity itself must file for the PPP. So the government just recognizes how crazy it would be for each self-employed partner member to be filing their own as an individual. And thus, they've really made the requirement that partner income needs to flow through a partnership application. Again, you're going to see examples of that. Now, for independent contractors and Schedule C workers, this updated guidance does provide some expanded definitions of what is qualified and what is forgivable. To be clear, items must have been in service prior to February 15th, 2020. What does this mean? Any rent, lease, utilities, your cell phone, your internet, you can't go out and start a new expense now asking for money that you hadn't been paying last year to try to get that all forgiven. So you will need to prove that things were in service prior to 2/15 of 2020. And that these items either were deducted or were eligible to be deducted on your 2019 taxes. Again, you'll see in the examples specific lines on the Schedule C where those show up and would qualify in the examples that we're about to show. What is true for some of you out there is that you may not have a big building that you're renting or paying mortgage interest on for your business, but you do have a vehicle because you're a realtor, for example, and you're driving around everywhere. And whether you lease your vehicle, that is considered rent, or whether you're paying on the vehicle because you own it, but there's a portion of that that's interest, that is also considered in here in these expanded guidelines. Not going to go deeply into that right here. Again, we can reference that and discuss that in the examples, but those are enhanced kind of qualification guideline clarifications that were put into place. All right, at this point, I'm going to go ahead and stop sharing. I'm going to let Pat Generis, our managing principal, walk you through some examples of sole proprietors, and then Kellen Leone will walk through a partnership example of how we actually calculate loan amounts and forgivable amounts. Pat?
Thanks, Dave. Let me get in here. Yeah, we wanted to give you some examples to show you what's really at stake, to get you motivated, because it turns out they could really give away money very, very fast. We suspected it and they proved it the last couple of weeks. So we do have a few examples just to give you an idea of how this is going to actually work in reality. Let me share my screen. My first example is a realtor, and hopefully you can see my screen here. Arthur Fonzarelli. You can see gross commissions, and you guys, if you are a realtor or self-employed, you're familiar with this. You file it every year. This is one of the main documents you're going to have to provide in order to get this forgivable loan. So here's his gross commissions, but I've highlighted the important stuff on the form that's going to affect the amount of the loan that he can get and the amount that can be forgiven. So this is a very simple example. There is no wages. It's just him. He's a realtor and he has some expenses, out-of-pocket expenses. And so now I'm going to take the information from here His net income after all expenses is $100,000, which is the max, coincidentally enough. So here are his earnings. Again, no other employees, so it's just him in this example, $100,000. Divide that by 12, gives you your average monthly income or average monthly payroll, since they're treating net income as payroll. Take that times 2.5, and that's the maximum loan amount for this hypothetical. And we've been recommending all along that you take the maximum loan amount. It may not all be forgiven. That's okay. It can't be forgiven if you don't borrow the money. So take the maximum loan, in this case, $20,833. Now the forgiveness, what's different about self-employeds is it's kind of baked in, because it doesn't matter what you make in 2020. It is entirely based on last year, 2019. So you know when you apply what portion of your income anyway is going to be forgiven on the loan. And so again, we were at $100,000. Divide that by the 52 weeks in a year, take it times 8, because you get 8 weeks of forgiveness. That's $15,385 of forgiveness. He didn't have any other payroll, which is the orange section here, so no forgiveness for that. But he had some other expenses that qualify. He paid some rent. Again, no prepayments. This is 2 months of rent. He had some utilities, cell phone, that kind of thing. And he also had some interest that he had to pay. You add all that up, and in this case, the maximum loan forgiveness would be $17,135. He borrowed $20,833. So they write off the 17, and he's left with a loan for $3,699. It's 1% interest payable in full in 2 years. It's like a demand note at 1%. So pretty nice, a lot at stake. So you can see why you would be motivated to try and get this loan. Next example is another realtor, and we just did this example to emphasize the point. So everything else is exactly the same, except that this agent earned more commissions. His bottom line was $149,750. And his PPP loan, all else being equal, will look exactly the same as the realtor that only made $100,000. They cap that payroll amount at $100,000. They do it on employees, and they do it on self-employeds. So it's fair enough, right? And I'm not going to torture you by going through the entire example again. It was just to emphasize the point that it's up to $100,000. Certainly lots of people make less than $100,000. Whatever it is, up to $100,000, that's the payroll for the proprietor. We do have one other sole proprietorship example. In this example, I'm looking at a landscaper. It's not just him. He has a bunch of other expenses, but he also pays some employees. $25,000 in wages. He's got health insurance for his employees. That's $2,500 a year. We had some state unemployment tax that counts as a wage expense, $500. And finally, he has a simple IRA, and so he makes a contribution for his employees. That was $750 in 2019. His bottom line was $85,000. So let's look at what might be in it for this landscaper if he can get a PPP loan. So the first part of calculating the maximum loan is to look at the proprietor himself. And again, his net income was $85,000. So his payroll for the purpose of this loan is $85,000. I mentioned he had some employees, $25,000 in actual comp, their health insurance, their retirement, and the state unemployment tax expense. You add all that up together, and you've got $113,750 in qualified payroll expenses for last year. The average for that, divide by 12, $9,479 a month. Multiply that times 2.5, and our maximum loan amount is $23,698. Again, for the proprietor, it does not matter what happens after we get the loan. They're basing the forgiveness on 2019. So if he makes more or less this year, it doesn't matter. We're going to take the $85,000 that he made in 2019. We divide that by 52, multiply it times 8 to get 8 weeks of income, $13,077 forgiven. And then the rest of these expenses, they're based on what happens after you get the loan. So it's 8 weeks after the loan origination. So 8 weeks after he got the loan, he spent $3,846 in wages, based this on last year, $385 for health insurance. He made some retirement contributions for his employees, and he had some SUTA expense. And like our realtors, he also had some rent, utilities, and interest. You total all that up and you get the maximum forgiveness. And so he borrowed the maximum, $23,698. They forgive $19,250. And we have a remaining loan, $4,448, due in 2 years from the date that we got it. Interest is 1%. And those are our sole proprietorship examples. And now I'm going to let Kellen go ahead and explain how it would work for a partnership, because they don't file a Schedule C. Kellen?
Thanks, Pat. I'm going to go ahead and share my screen here. And before we get into the examples, one thing I really want to emphasize for the partnerships, and Dave touched on this a little bit earlier, these partnership applications are going to need to be filed at the entity level, not at the partner level. So the partners won't individually be filing these loan applications. It has to be done by the entity. So that's one important step in this. To start off with this example, we're going to take a look at 3 different Schedule K1s. So if you're not familiar with this schedule, instead of having a Schedule C, partnerships issue their partners Schedule K1s to show their share of business income for the year. In this case, this partnership is a salon. It has 3 partners who are all equal in their shareholder percentage. For this year, the partnership had a total income of $150,000, split 3 ways. We can see here in box 1, this partner had their share of income, $50,000 for the business. Partners also often receive guaranteed payments for their services. So assuming that all of these partners are working in the business, this partner also had guaranteed payments of $25,000. To get their net earnings from self-employment, if we look at box 14, we add those 2 amounts together. This partner net earnings from self-employment, $75,000. We'll go ahead and we'll take a look at partner number 2. Again, similar situation, equal share of the business income, $50,000. This partner, however, received guaranteed payments of $75,000. If we look at their total earnings from self-employment, $125,000. Major difference here is they're over that $100,000 cap that we talked about for self-employed individuals. So only $100,000 of that is going to be included in their calculation for eligible payroll expenses. So we'll go ahead and take a look at partner number 3. Again, income of $50,000, guaranteed payments of $100,000 for this partner, net self-employment earnings of $150,000. So altogether, we've got net self-employment earnings of $350,000. However, a couple of those partners are over the cap. Go ahead and take a look at the calculation for it. So they only have $275,000 of eligible payroll expenses for that self-employment income. In this example, we don't have any other employees in this partnership. We're going to keep it kind of simple there. So we have total self-employment earnings and eligible wages of $275,000. We're going to take that number, divide it by 12, get the $22,917 for their net profit. We're going to take the average monthly payroll for 2.5 months, multiply that by 2.5, and we have $57,292. And this is going to be the base amount for their maximum PPP loan. If we go ahead and take a look at the calculation for the loan forgiveness portion, again, it's going to be exactly the same as the calculation was for the Schedule C. We want to take their self-employment income. We're going to divide it by the 52 weeks in the year. And then we're going to multiply that by the 8-week covered period of when those expenses would be eligible. Now, since this amount is actually based on 2019 numbers, that's not going to change. It's not going to be based on anything in 2020. The net self-employment earnings are just off the 2019 numbers. If they do have other expenses, they don't have for payroll here, but they do have some rent payments, some utility payments, and some other interest, some other business interest. Again, those are over the 8-week period, so prorated for those 8 weeks of that covered period. Once we factor those in, the maximum loan forgiveness amount that they're eligible for is $44,058. Again, we would encourage everybody, if you're eligible for the loan, take the maximum amount. It's a low interest rate. We can see here, once you have your forgiveness amount, you take the difference. They would have a $13,234 loan remaining that may need to be paid back. Again, 1% interest, that interest will be eligible for forgiveness as well. But that's the main point of that. And I'll go ahead and toss it back to Dave and Pat.
Yeah, so that actually constitutes the presentation portion. We'll have some closing thoughts after a Q&A session now, but I think what we'd like to do is open it up to that question and answer period. So given your scenario, given what you've seen, given these examples, what questions might you have? And Kellen, we can all come back on screen and feel free to answer any questions that may emerge, and then we'll have some wrap-up thoughts for you.
Yeah, so we only have one question so far. So if you have any questions that you've gotten throughout the presentation, feel free to drop them in right now. This first one comes from Bonnie Fortune, and she asks, what is the guideline for the loan forgiveness? Which we covered, but I want to make sure that we've adequately covered it. I'm going to bring in Bonnie and make sure that we've covered it for you. Bonnie, can you hear us?
Yes. So I know you guys talked a little bit about it, but we still don't know how we can apply for the forgiveness right now, right? And
right, you don't apply for the forgiveness now. You get the loan first, and then it's an 8-week cover period, and after that, there'll be some compliance forms, I imagine, and you'll apply for the forgiveness. But you don't apply for the forgiveness until after the covered period. That's right.
Okay, so the paper that we saw is that it says, hey, as long as after you get the loan, go ahead and request for the forgiveness, but they still don't have very specific guidelines that you can follow to do it. I wonder if it came up already or still hasn't, and they're still working on it.
Bonnie, our experience is that banks are going to be the real source that you're going to want to get with, and banks have a little bit of different interpretations of the SBA guidelines. So what I'm hearing from you is you've already submitted your PPP loan and it's been approved and funded. Is that accurate?
Mm-hmm. Yes.
Okay, great. And so then congratulations on that. Good for you. Contact your lender and see what guidance they can provide you now, which may be subject to change based on SBA clarifications moving forward. But in essence, you're going to have to, do you have employees or do you not have employees?
Nope, just myself.
Okay, so if it's just yourself, then the 2019 Schedule C earnings for you, that's already baked in. And then whatever evidence of the rent, interest, utilities, and so forth that you have, just be prepared to, supply evidence of those bills. What else am I missing in terms of what you're asking
about that?
No, I think we're clear at this moment. Thank you.
Okay.
Make it bigger.
Thanks a lot for your question, Bonnie. Our next question comes from an anonymous attendee who asked, should we apply for the loan ASAP? Pat, you're muted. I'm going to unmute.
Absolutely. Absolutely. They ran out of money very, very fast. Didn't take 2 weeks to give away $350 billion. I think the next $250 billion, if we're lucky enough to get it, will go at least as quick. Sure, because you've already got people in line. You've got people that applied that the money ran out before they were able to get it. So if you haven't already applied, do so.
Don't wait.
Yeah. Yeah.
Excellent. Our next question comes from Carl Larson. Carl, I've brought you in. You just have to unmute.
Yeah, I think the second part is redundant regarding the forgiveness. I was just curious how it would actually work logistically.
Well, your bank, we don't really know, honestly.
Right.
The mechanics of it, and it probably will vary by bank. But if you're self-employed, you file a Schedule C, and I know you do, Carl, because I know you. That part of your forgiveness will be baked in.
Okay.
As long as you get the loan, we'll be able to know the part that is related to your net income. You're just going to do the math, divide by 52, take it times 8. You're going to get that forgiven. And then the other stuff is the variable stuff. So they'll look at cell phone paid, utilities, rent, those kinds of things over the 8-week covered period. Somehow, I don't know what the banks are going to ask for. If they're going to ask for actual invoices, a general ledger, canceled checks, you're going to have to prove that stuff up, and then they'll do the math and give you the forgiveness.
Okay.
Did that answer the question?
Yeah, the vast majority in my case, I think is going to be the self-employment income.
That's right. And so it's very nice for Schedule C people because they actually know what their forgiveness is going to be. For people that it's mostly based on their employees, that first wave, it's going to be based on what they spend in the 8 weeks, which gets a little hinky if you're really slow now because of COVID. How much are you going to pay out in payroll versus what you paid out last year? And so they may get a lot smaller proration on their forgiveness.
Yeah.
Don't forget telephone and internet as expenses that would qualify as utilities for yourself.
Yep.
For sure.
Yeah, I was just going to add to that. They did specifically say in the guidance that the reason they made it that way for self-employed is they know a lot of times they don't have those expenses. They might not have someone on payroll. They might not have mortgage interest or utilities, if they're working out of their home, things like that are personal expenses. So that's why they did it and set it up that way to base it on your 2019 net earnings.
Yeah, there's less going on for sure. A lot of times there's a lot less.
Awesome. Did we cover all your questions, Carl? You have anything else?
No, thank you. That was great.
All right. Thanks a lot for asking. Our next question comes from one of our staff who asks, what if you have not filed your 2019 taxes yet? I assume that means like your Schedule C.
Yeah, you need to file. And at a minimum, I think they will allow you to prepare your Schedule C and use that for the application. But if you haven't filed your tax return, I would do so. Yeah.
Excellent. Our next question comes from Peggy DeCapua, who I see you in here twice. Let me know if I got the right one of you. Peggy, can you hear us?
Yes.
Hi, Peggy.
Hi. So the question that keeps coming up over and over, and I did send this out to our team to participate. So if you're a realtor and you don't have any employees, it's just yourself,
Yep.
right? Are you eligible if so say you have your 1099 from Berkshire, right? Because your commissions are coming from them. You don't put it into a business account and pay yourself out of that business account. Are you still eligible?
Absolutely. That's why I showed that Schedule C. So you look at your tax return for 2019, look at that in here. I'll share my screen again. Yes, you are eligible. You don't have to do any kind of hokey paying myself kind of thing. Look at line 31 and up to $100,000, that is going to be treated as if it is payroll. So it's this line right here on the Schedule C. It's not the 1099 amount that matters. It's the net income. They're going to go on last year's net income. So if last year you made $100,000, that's the number. If last year you lost money, there's no PPP loan there. If last year you only made $12,000, they're going to base your payroll on line 31.
And so if you continue to have closings during the 8 weeks,
It doesn't. Yeah. So for self-employeds, it's nice. And I guess it could be terrible if you're making way more money this year than last year. It's entirely based on 2019.
okay.
Yep. Your wages, if you have an assistant or something that you pay, that'll matter. But for your purposes, for your net income, it's going to be based on last year's tax return.
Okay. Well, thank you so much.
Of course.
Yep. Thank you, Peggy. Our next question comes from Nick Recupido. I'll bring him in. Nick, all you have to do is unmute.
Nick, fantastic. I'm happy to see you in here. Look at it.
What's going on, you guys? Thanks for having me.
Great, great. Good that you're here.
Yeah. So you guys got my question there, I see.
Oh,
Yeah. So you applied for the EIDL and you haven't received word yet. And he asks, will he have to reapply once new federal funds are allocated? And is this
the EIDL, yeah, I don't know if they're going to refund that. I know that they're this 250 billion that they're trying to get is specifically for the PPP, but
Okay.
I'm not even sure that they're going to refresh that fund. I don't know that they aren't. I don't know that they are. I don't even know that they're going to get more money for the PPP.
Mhm.
So I unfortunately, I can't answer that question. But if you can qualify, you could look at your Schedule C, Nick. I know that you had one last year. I don't know what the outcome was, but you file a C and an E. The E doesn't count, so rental income really doesn't count. But the
Okay.
self-employment income, contracting and stuff like that, you could apply for a PPP with that. And I could do the math and send you an email or give you a call and tell you if it's worth looking at that. Because I think the PPP is a lot easier to get than
Okay.
the L was.
Yeah, I mean, if you don't mind, if you could fit it in during
For
these
sure,
times, I appreciate it.
Absolutely.
Okay.
Yep.
Okay. All right.
One clarification that I can provide that might be useful for other people is the SBA did release guidance earlier this week that before all the funds ran out that said, hey, if you applied for an economic injury disaster loan and requested that loan advance of up to $10,000 in order to spread out the funds as much as possible, we're going to base it on employee headcount, and it's going to be $1,000 per employee. So if it's just you, you
Mhm.
would have been eligible for now $1,000 of a forgivable loan advance through the economic injury disaster loan, and then whatever other amount you would want to borrow, again, if that's going to come through. But according to our understanding, the EIDL funds have also been exhausted. And in a lot of cases, the PPP is a better bet for our clients in a lot of cases. And if Pat's going to run, through the numbers for you, then you're going to be covered that way.
All right. Thank you, Dave. I appreciate it.
Yep.
Any other questions, Nick?
No, sir. That'll be it. Thanks for your time, you guys. And I look forward to talking with you, Pat.
I'll talk to you soon, Nick. Yeah.
Okay. We'll see you.
Thanks, Nick. Our next question is a follow-up from Carl, who asks, if we receive a stimulus check, could it be impacted at all? No?
Not related.
Separate thing.
And then we're on to our last question. So if you have any other questions, now is the time to get them in before we begin our wrap-up. It's an anonymous attendee who asks, if I already applied for an EIDL loan and didn't receive anything, can I still apply for a PPP loan?
Yeah.
Yeah, absolutely.
Yeah. Absolutely.
Contact your lender, and what we've recommended to some of our clients is if you applied for an EIDL and then you do apply for the PPP, let's say you're fortunate enough to get your loan accepted, your request accepted for the PPP, you can reject the EIDL, when that comes through, depending. So it just kind of depends on the timing of things.
That is a case where the grant portion would reduce your grant in the PPP anyway. You can't double dip on the grant. So
Yeah, and we actually cover that in totality in our previous webinar that we mentioned before that we hosted on the 1st. So if you have any questions, reach out to one of us. We can make sure that you get a recording of that webinar.
Yep.
But that's all the questions that I have. So
yeah, let's do the little wrap up here, you guys. The information keeps changing. And in order to support you as you're making decisions as a self-employed, sole proprietor, small business owner, or an individual with real tax consequences, we're keeping information up to date on our coronavirus updates page. I mean, we'll put the timestamp at the top of the page that shows when it was updated. So yesterday at 5:15. And a lot of times we're putting the newest information right at the top, trying to bold stuff to bring it out to your attention. But we're also continuing to update all of the individual questions and answers within here as things evolve. So visit that page and know that it is an up-to-date resource for you. And then for you as action steps, get your documentation in order. Again, one of the FAQs says, what do I need to apply? That tells you what that documentation is. And we've got a link to the actual application on our website. Contact your bank to find out if they are currently accepting applications and if you can apply with them. If you're having any trouble with that or need any guidance from us, reach out to us if you're a current client. And if you're not a current client, we are accepting new clients and we would happily start a relationship with you. We love working with self-employed and small business owners, helping you succeed. Certainly have a ton of realtors that we work with and other industries as well. And if you would want to, you could just visit our Get Started page, which would say, how can we help you? Small business or individual, and it takes you to the direction you want to go. Got a little video about us and can schedule time for an initial consultation to do more. That's all we've got today for you. We hope things were useful, and you'll get a recording of this. And if you know people who could benefit from this and you want to forward them the invite for the 2:30 webinar, we certainly would happily answer their questions and be a support to them. All right. With that, I think we'll call it a day, huh?
Yeah, thank you everybody for coming.